All right, what is up, traders? My name is Heath, and this is Trade Talk. We're going to discuss the FX market as it just opened up. It's the favorite time, or my favorite time of the week. So first off, we're going to start off with the DXY, the dollar index. As you can see, we have been in a downtrend since the March scare. We had the March scare, and we liquidated both sides of the market, and then we moved lower. You should be able to hear me, Tom. I don't know if you guys can hear me or not. So I'm going to keep rolling out. All right, here we go. So could you guys let me know in the chat if you can hear me or anything? All right, perfect. Nice. Thank you guys. What's up, Tom, Ryan, Jonathan? Life is good. Everybody's here. All right. All right. So back to the DXY index. We had this March scare right here. We liquidated both sides of the market on a weekly time frame. You can see that this wick got all the way down to here, which would have cleared out any stops resting below this area, and on to the upside, clearing any stops above this area. So essentially both sides of the market was wiped clean, and we had a consolidation and then a breakout to the downside. And since then, we have been trading completely to the downside. The bears have been in full control of this market. So we're actually into this consolidation, which we haven't been in this area since 2018. April 16th was the last time we were here. So this was a new 2-year low that we have made it. And we have a new level of market structure, swing low on a weekly time frame basis. We have popped up out of there with a higher close on a weekly, and we are currently retesting that area. Now, there is no directional bias on this just yet. As you can see here on an 8-hour, you have what pattern traders would say would look like an inverse head and shoulders. You did clear that neckline out with this swing high, and then you sold off. So this essentially just could have been a false break to the upside. So this is a market structure level, this white line. So what we will do is we will go in and we will pick out some more areas. Oh, the market just opened up, so probably going to get stopped out. Anyways, we got some clear resistance areas to look for, some possible areas right up here. First one being 90.486. All right, so we're going to watch this area. For right now, while we're trading inside of this range, there is nothing to do. We want this to show us one side or the other of which direction it is going to go. So if we get a breakout down back below 89.999, then you can absolutely look for lower levels to be tested. And if you get a break above 90.486, then this would be the target ultimately right here. All right, and that level is 90.951. All right, so moving on, we're going to check out Euro USD. I do have 2 trades open in the small account currently. So you might see some stuff popping up over here. Just never mind that. All right, so basically I am long the Euro USD. I got long on this wick down, the retest of this trend line, and it was also a stop hunt on the DXY. Let me go pull this, see if I can pull this back up real quick. There was a trend line coming, and it like beautifully tested it. Never mind, let's just stick with this. Anyways, the DXY cleared out all the stops, and then it created that wick right here on the 8-hour on the Euro USD. So I got long, and I was currently I'm still long, but we scalped this Friday. We scalped this move out right here. We got long in this area, and we took profits up here. So essentially what happened, excuse me, essentially what happened is when I took profits for the scalp trade, it closed out the swing trade. Thank you, Oanda. So anyways, I'm no longer long from down here. I just wanted you guys to know that anybody that's keeping track with the progress of that small count, it absolutely took me out of the trade. So now I'm long in this area somewhere. So I'm assuming I will probably be stopped out as I took the trade Friday, and it's of no concern because massive profit was taken on both of those trades. So what is left is just essentially is margined out with these two trades. All right. So moving forward for the week to come, what am I looking for on Euro USD? So this line right here, I had to go all the way down to a 15-minute chart to get. All right. And I'm going to show you why. Basically, we have all of this consolidation happening inside of this box. And I am assuming that before the real move happens, either it will try to trigger out these people here, or we will target these people here. Either way, I assume one of those areas to be broken. Now, I don't know if it's going to come down and stop everybody out and then move higher. We don't know. We have to let price tell us what it's going to do. And it's too early into the week to get a bias. First and foremost, I am long on this pair because it is still structured to the long side. If I pull out a daily real quick, just to show you, we did break this downtrend, this steep downtrend line. We did break out of that on a daily basis. We tested it and have pushed higher, closing above this market structure here. And we did an inside, well, not an inside day, but a very small range day on Friday. This candle here that you are watching being formed currently is today's candle. So this is going to tell us a little bit more. Anyways, back to that. So you can see that we are trading in this range. So back to the 15-minute chart so I can give you this level. I am going to be watching how price reacts to this level. It's just this bearish candle on a 15-minute time frame, this one right here. All right, and that level is 1.21254. I will look for that area to hold as support if this market's going to continue up, because essentially you will have stopped out everybody. This level was not tested. This candle almost tested it right here, but it did not test it. Right here. All right, you can see it did come down, but it didn't. It just essentially touched the high of this candle, or not even touched it, but that isn't really a test. I want to see a wick through a level and then a reversal out of the area to be a significant test. So this level will possibly come into test this week. It isn't far from current price right now. So when the Asian session opens, this thing could throw 3 or 4 big 15-minute bearish candles and possibly test this area. So for you guys that are going to be trading around the London Open, take a watch of this area here at 1.21254. That's this area here. If you see any kinds of signs of a bullish reversal, then you can, and I just got stopped out. But the spread is pretty wide to 8 pips. So, but like I said, I took that trade Friday, so I was taking it up in the high areas of the range. This will be your target. If you catch support at this level down here, all right, your target will be this high up here at 1.21896, this level here. All right, and that's what I'm going to be looking for moving forward. If this level does not hold support, this 1.21254 level, I will be targeting this low down here for the weekly range expansion. So basically, when this weekly candle wasn't an inside candle because you did wick lower than the previous candle's wick low. However, the candle body is traded with inside of this big candle body here. So essentially, this just could be a retest. All right. So basically, you came back up retesting an area on the bullish. So you will have to see. But if we do close below that level, I will be targeting last week's low. And that will be a decent, healthy range expansion. All right. So we're going to be watching for that to happen. Those are going to be your targets to the upside. 1.21896 to the downside. 1.20536. Euro USD. Oh, no, I'm sorry. USD yen. All right. So basically, I have a short position right here on this red line that I took also Friday, but I took this level late in the day. I don't even know why I took it. I guess I was bored or something. That's something I very rarely ever do. But I was assuming that it was going to hold as resistance and move lower. So we are currently pushing higher. My stop loss is this blue line here. The spread is opened up 6.2 pips, but within this hour and the next hour, this can open up as high as 20 pips. If that were to happen, I will get stopped out of this one as well. But like I said, I'm not sweating it. Everything was good last week. So moving forward on this one, you can see that it is trading in this wedge pattern. This is an hourly time frame. Let's go check out some 8-hour areas to watch just to get a base going. Let's just delete everything and start from scratch. All right, so the very first area, obviously, as support would be this down here at 103.578. Now, that is kind of far from current price, but it is the only 8-hour level you have. Now, on the upside, I would not use this bullish candle because it wasn't a bullish expansion range. It did get taken out, but if I did use it, you would see that we've already traded through it. So your next area would be to watch this. But I don't like that level either because it's already been traded through so many times. So essentially, when something like this happens, I will take the next one that has not been tested. So this is your last 8-hour market structure that has not been tested. So basically what I will look for in this weekly range expansion is for one of these two areas to be taken out. Being that we are on the low side of this and being that there is a trend line coming into play right here, I wouldn't be surprised if price trades well above this line tonight and then closes lower. If that happens, I will be watching for a push to the downside, and my target will be this low right here at 103.328. The target to the upside will have to be first and foremost this market structure swing high, just the high of that area, and then you have this wick. But if this bullish price action keeps moving forward, you're going to be taking or trying to target this high up here at 104.398. So your major areas or targets for this weekly range expansion are going to be 103.328 on the bearish side, 104.398 on the bullish side. Pound dollar. Pound dollar is trading crazy. I mean, it's putting in swing highs and then putting in swing lows, almost range bound, but taking out, the swing highs. So you've done that once again. You've taken out this high here with these candles. They were closed, but they weren't strong closures. So now we have experienced a little bit of selling coming in. We have taken out this market structure swing low. Remove all drawings. This market structure swing low on an 8-hour closing basis. So as of now, since this candle took out this area, you have to assume that the move is wanting to go lower until you take out at least the opening price of this bearish candle. So as of right now, any price action trading inside of the range of this bearish candle is essentially just range bound activity. So you must wait on at least a breach on the low side or the high side and then look to enter on pullbacks because there is no clear direction yet. We did have this swing high up here. All right. So essentially that wick right there would be your target, but this is going to be your first area of resistance to the bullish side. That level is 1.37460 right here. And then to the downside, there is more of a risk to reward because you were trading up here for now. This is the very early stages of the week. So if price looks like it's wanting to go lower, this wick all the way down here at 1.35198 would be my target. So we just have to give this a little bit of time to suss out some direction. Like I said, you did take out this market structure. So now your new market structure swing low is 1.36470. And that's this area here. And you want to see that taken out on an 8-hour closing basis. All right. So this is what, this would be the target to the downside, target to the upside. There isn't much of a risk reward on that target to the upside from where current price is right now. If it will allow me to do this, we will pull it up. That's a 62 pip move. So that's a nice move. If you show signs of support on possibly a 1-hour chart or something, this is going to be your first area to look for a support hold. Sorry, right here. No, it would be this one here, right there, because that's the last bearish candle. So you want to see price come down and hold support there. That level is one spot 36612. But being the Asian Open, the Asian session likes to throw false signals a lot of times. So essentially what I would do is I would wait for the London Open to see if you're holding support here or have you just blasted through it. And if that's the case, you can look for a pullback entry to get short, targeting this area all the way down here. And that would be possibly a few day trade, not just one, because that's pretty far distance. But the risk to reward is more towards the downside. Obviously, if you get a breakout of this area right here, you're going to have a pretty nice move because there's nothing, even on a 12-hour, there's nothing. Here's your daily. So finally, you got this 2018 price action, and that's it. So you are trading in an area to where you could absolutely break out of here and continue moving higher. And once that happens, you would just have to go get levels from way back out there. Silver. Now, silver was trading. Silver did put in this this little thing here. We traded up out of that area with a nice strong push. We came back. This purple line is what I refer to as a traditional support and resistance area. It's not based on any candlestick structure. All right, but you can see that it clearly tested there. I mean, if you just look, you can see that this area has been targeted and used, and so this area does have some merit, and that level is 25.03049. It's just this purple line. So on silver, I don't believe this market opens at least for another hour or two, but on silver, you want to see if you're holding daily closures above this area. If you are, then my target is going to be to the bullish side, and I will be looking for 27.92720 to come into play. Now, since we traded range bound for most of last week and a little bit of the week prior, this level here is, I had to get that on a lower time frame chart. So let me go down and look real quick why I have that level there. Yeah, I don't see anything. I wouldn't have been using anything over here. All right, so really the low target, since you've been in this range, your high end of target would be 27.92720. This line here, your low end of the range expansion is going to be 21.98572. 21.98572. That's just this low here. So I am expecting either this high or this low to be taken out this week. This purple line is a good area to watch just to see if you get daily closure below that, then it looks like the target is possibly going to be this target down here. All right. And I know silver bulls don't want to hear that, but I guess there is a possibility of it catching support on this descending trend line here. I mean, it didn't really test it, but if it comes down and holds there, then maybe I'm wrong on this target. That's just how trading works. Every strategy works. It just doesn't work all the time. All right, so we're going to be looking for this area to hold as support if you're bullish, and you're absolutely going to be targeting the high end of that range. That would be an area where I myself would take profits. I would then move my stop to break even and see if this area gets taken out. On gold, it was not as strong as silver. So you had the same kind of a trend line up here, but then we took that out on a daily closing basis. We traded up in there for about a week, and then we came up out of there very hard. That was a big, strong bearish candle. Now, we did close a daily above this swing high market structure here. We did test it, and Friday we closed right back above it. All right. So this could have been a pullback entry on gold to the upside. You do have this. I don't know if this is actually going to be any kind of resistance or whatnot, but I would suspect that the underneath side of this swing low would possibly hold as resistance as it did currently. All right. So if this holds, you're going to be looking for higher prices. I did find a closer level on the bullish side of things to look for another area of resistance, which is going to be this bullish candle right here with the long wick, that would be another area to look for a resistance test. And that level is 1889 spot 26, this area here. So basically what I want to see from gold is I want to start seeing it closing hourly candles above old swing highs on an hourly chart and pushing higher. That way we could possibly look to take a retest entry long on 1873 spot 694 and be targeting this level here, and then ultimately a move higher. But a lot of stuff is going to happen for that to happen, as the bears are in control of this market. All right. So if I pull up like the RSI, you can see here that we have penetrated the 50 area. You went back up and you came right back down. I like to look at the 50 area as basically my line in the sand as to who has control. Bulls usually have control of the market when it's above 50. The bears usually do when it's below. You did shoot up out of there, but you came back down. So you are below the 50 area. Until you get up out of there, which would have to happen, like I said, this week, that would give me more confidence to look for longs in this market. As of right now, it's being looked at by sellers as any pop in price would be looked at as an opportunity to get short, targeting this wick all the way down here. Why does this keep doing that? All the way down there. And that is 1802 spot 955. So that's going to be your bearish target if this starts to show signs that the bears are still fully in control. CAD yen. CAD yen was one of the trades that we took last week. On this candle here, I alerted to the chat room that I was looking to take this long. We got a push down. I got long and I was targeting this high here. That level was 82 spot 190. I even posted it in the Twitter account for anybody that was watching, that was the level that I was looking at to take profits. We went up in that area. It scaled me out of the trade by 2/3 of the position size. I moved my stop up to break even and have been since stopped out. Once we got up in that area, that target area, it looks like I was not the only one taking profits, because we have since sold off and we cleared out this swing low right here on Friday with a strong bearish close. All right. And then on your New York session, you attempted to catch back up to the bulls, or the bulls attempted to regain control of the market, and they failed. So as of right now, this is structured looking like the target will possibly be this area right here at 81 spot 086. So if you cannot maintain bullish 81 spot 588, I do believe that my target would be 81 spot 086. But this is going to be your so-called line in the sand. This level right here was from a lower, this was like, I think this was my actual entry on Friday's trade, or not Friday, it was Tuesday or Wednesday. I can't exactly remember. I did do a trade recap video on that if you want to go check it out. Euro yen. All right. So Euro yen made me look like an idiot. I absolutely was looking for this thing to come down, test, find lower high support or higher low support, and then push higher. It did not do that. The bears obviously had full control of this market, and we have been remaining in that fact. Now, this could just be a push up for bears to re-engage the market. This trend line is just coming from down here, and it's tacked to these lows here. So when you broke below there, it came out of there strong. So this trend line was holding, and it is no longer. So we're going to look. I mean, this would have to break all the way back above that as well for me to look for this to be bullish again. I mean, it is still structured semi to the bullish side, because you can absolutely just take your trend line here now and see what happens. If you take out that low, you're going, I mean, if you take out this, you're heading lower. My area to look for would be this level all the way down here at 124 spot 504. This line here, which is simply taken from this bearish candle here. All right. And then to the upside, obviously it's going to be the last high it put up when it reversed. And that level is 127 spot 491. So we have to wait and let this suss itself out. I do not like it when we sell off out of a range and we come back into that range, because you don't know if this is just trying to find more sellers or if the bulls have taken back control. So that's usually when I like to use RSI or Stokes. But you can see on the RSI, let's go to a daily, because I only look at these things on a daily time frame. You can see on a daily time frame, you have closed the daily back above that 50 level. So that's a kind of a good indication for that bulls are there. But on this thing right here, the Stokes, it seems like this thing has been interacted with this level several times. So yeah, I'm looking for this to hold possibly again. So until I get a strong daily close up out of this area, I will not be looking for bullish trades on this yet. This thing has a lot to prove, in my opinion. And if the dollar is going to regain its strength for this week, then obviously the euro pairs are going to show weakness. S&P 500 isn't open yet. You did have a nice pullback after you made new all-time highs. Let's get rid of all this nonsense. Right here, you did have that trend line, though, that's going to be kind of holding up some bullishness. So basically, in a market like this, you have to just play it the way it is going. I mean, it's obviously every time it gets sold off, it gets bought back up. So if it comes lower, look for this to be bought back up until you start getting lower closures and taking out market structure levels. Once you start taking out market structure levels, then and only then is this no longer going to be looked at with bullish intentions. For me, anyways. This is just, I'm just telling you what I'm looking at for the week to come, not financial advice at all. Aussie yen. Aussie yen is still structured to the bullish side. This basically did the same thing that everything else did. You can see here that this area, this last bullish candle on a daily closing basis, absolutely held as resistance. You did get a daily break above that level, but the next day you took out this daily range and the low. This is a bull trap. So with that kind of stuff going on, either the market is looking for lower high support or the bears are firmly in control of this market. This level here is going to be an area that it has to get below in order for me to look for short trades on this market. I am not going to be looking to short this. However, if you are looking to short this, your first target is going to be 79.513, which is simply the low made by this swing low that was made last week. All right. Your last swing high is up here. That will be your first area to add or look to hold as resistance, possibly at 80.723. But if I was bullish, I would absolutely be targeting 80.928, this high here. All right. So this is another one of those pairs where I have to wait for a day or two to kind of give me a better indication as to which way it wants to go. Aussie dollar is looking weak to me. It is looking like it's trying to pull out a top here or make a top on a daily basis. You are range bound. You're trading underneath this market structure, last swing high here, and you are trading inside of this market structure, last swing low. So let me get rid of everything and show that to you again. So that way you know exactly what I'm talking about. So when stuff like this happens, I have to wait for this to come out. All right. You will get chopped up inside of here if this is going to be an inside week of trade. If there is if there's not much momentum or much, this thing will just bounce back and forth potentially inside of this range. So for bears to be in control, I want to see big, strong push and close below this level. And in that case, then I would look for a market structure swing high to look to get short against, looking for that to hold as resistance. So for now, you're going to wait on Aussie dollar to break outside of this weekly range. All right. This is a weekly range. You can see this, but candle body is literally nothing. This is a doji. You did take out this low and you did close bearish. Bullish. So that does indicate currently that maybe the bulls do have a little bit more control of this market, but I don't like it. So I'm waiting for that to break up out of that range to show me which way it wants to go. If you want to trade it anyways, your target, I would target this low here at 0.76426. The low end of that range, if I forgot to say it, was 0.76808. The high end is 0.77780. All right. So this area down here at 0.76426 would be your bearish target. If you are bullish, your target would be this high right here, and that would be 0.78201. If you're new to the channel, or if you're not understanding what I'm talking about when I say target, I am mainly an intraday scalper. So I look for daily range expansion, and I always have a target in mind. So essentially, this is going to be a bearish target. This up here would be a bullish target, meaning if price catches support down here and you want to target this because you think it's going higher, I always shed 2/3 of my position out of those targets. So that way, if this is just going to be a stop run and then a massive sell-off, at least I took 2/3 of my position out of the market. It's easy to make money in the market. Learning how to keep it is the real goal of a beginner trader. New Zealand yen, excuse me. New Zealand yen is trading inside of this thing here. Essentially, basically, I took this trend line and it was holding price, but you can see a clear bullish or bearish break below that trend line, and you have not retested it yet. So your bullish or your area to look for resistance has already been tested, which would have been this last bullish candle at 74.754. You came up into that and you had a bearish close. And then you traded range bound for a whole 3 sessions. So for a whole day, you consolidated in this range. Bears did have control. I would have to assume that a test back up to that level would possibly re-engage sellers. So my first area to look for support is going to be this area here at 74.012. My ultimate bearish target would be 73.654. This low here. If the bulls do regain control, I don't know if we would get all the way back up to 75.582, but I would have to assume that would be the target to continue this strong bullish trend that it has been in ever since the March sell-off. I mean, you have been strong. You consolidated here for a bit, but so did everything, and then you have taken off. You've cleared out a lot of longer-term market structure levels. So this is still bullish in my opinion, but it is kind of throwing that toppish looking pattern. You are making lower lows and lower highs. So until that transition changes back to higher lows and higher highs, you have to look at it with at least a little bit more bearishness than bullishness. All right. And there's no point in talking about the dollar. So if you guys have anything you want me to take a look at, those are the main pairs that I'm going to be looking at this week. I understand that there's a lot of cross pairs and stuff, but in my experience, they tend to just basically stay doing the same thing as before, or as these things are going to be doing. These are basically your majors. There's a lot of yen pairs in there. We can go look at the yen index real quick, just so I can kind of show you what I'm looking at. I passed it up somewhere. There it is. All right, so this is the Japanese yen index. I don't know if you're familiar with it or not, but these are all old levels. I haven't looked at this thing in a long time. But as you can see, it is gappy, just like a stock, but it is trading inside of this wedge or this channel or whatever you want to call it. So this is the reason why the yen pairs are trading kind of like that as well, or at least a dollar yen anyways. So basically, until you get a breakout to the upside or to the downside of this thing, anything inside of it is just range bound. But you can look to get entries or look for entries to the downside. If you're bearish, you can look for the top end of the range to hold as resistance. I would at least want to see a daily closing basis. So if we get a big wick up out of there, then look for the low side of that range to pull in. We did have some yen weakness, and we have just been basically trading sideways to up. So we could see another bout of yen weakness for this week. So that would basically make all of the yen pairs bullish, essentially, determining or depending on their strength, the whatever currency pair you have it trading against. But this simply does look like a bear flag. So, and the last Friday you got down. So we could see some yen weakness this week, or it could rebound. We don't know. But that's why I'm looking at a lot of yen pairs. So if you guys have anything that you want me to look at, just drop it in the comment section. I'll give you a minute. Let me go back and read the comments real quick just to make sure. Good evening. Good evening. Yo, evening Heath. What's up, everybody? Can't watch it live again at work. Smash the like button, guys. Thank you, Smile. Hello, everyone. Just started an Oanda account, looking to fund it soon. Forex charting looks a bit more challenging than equities and stocks, certainly harder than Bitcoin. The Forex market is a bit tough, man, because you're trading against countries' currencies. All right, so the biggest players in the world are trading inside of this market. So just keep that in mind. If you're part of the C.T.M, Jordan will keep you in check. I promise. He's one of the best guys to listen to and learn from. He's very, very good, very great guy, man. I love that guy. And John, let me see here. NZD Lawrence, are you only doing currency pairs? No, brother. I will look at whatever you want me to look at, my main man. Just throw that in the comment section. Make sure you give me a ticker. Let's go check out New Zealand dollar. Let's get rid of any lines, no lines to get rid of. So New Zealand dollar is strong. I mean, like I said, everything basically followed suit with the same pattern. You had a March sell-off, and then everything was bought back up. So that's just too parabolic, not happening. So, and plus you've already closed several times below that. So essentially, I would take this last low here, and I would tack it to the lowest one of these three areas there, just like that. So as long as you're trading up above that, obviously you're not bearish. A break below that would indicate bearishness. Now your more near term, more parabolic trend line was broken just like everything else was last week because of that bullish push that we had. So obviously this could indicate that the bears are in control. You did come up out of there, but you did not clear this swing high. So for the bulls to regain control of this market, you need to see this get at least an 8-hour closure above this swing high. All right. And then you can look for retest trades or on a smaller time frame areas of support to catch in. And your target, or my target, would be this high here at 0.73156. That's New Zealand dollar. The low side of the side, obviously the low or the target for the bears is going to be 0.70964, which is simply this area here. Currently, it is opening a little bit weak, but I never trust the Sunday opening price. I always just look at it and see what it looks like it's trying to do. Now, let me be frank. Just because you closed below this ascending trend line does not mean that bears are fully in control. You did make a lower high and a lower low. All right. So currently, on a daily closing basis, they are. But all it would take would be for me to get back on the bullish side is a break and hold above this area. So basically something like this on a smaller time frame, though, not on a daily. I mean, like an 8-hour or something. So I would want to see a push up out of there. And then I would want to see a pullback into an area to find support and then look to take that target to the upside. All right. That's what I would be looking for on that. Let me find these comments real quick. Ryan fan question: how does one decide whether to use the bottom top wicks versus the closed body? Ryan, I always take my market structure levels from the body of the candles. The wick lows are usually, or the wick high is usually a target depending on where that candle is inside of the overall structure that the market has made. All right. So when I say I'm targeting this wick up here, it's simply because we know that short sellers have their buy stops up here above 73,156. So by default, anybody that got short here, by default, if their stops are still above this high, that makes them a willing buyer at a higher price. All right. So big firms and anybody that has billions of dollars inside of this market and they need to fill orders, they have to trigger these orders to fill their orders. So that's why you see a broadening formations in candlestick patterns all the time. I have a video on my channel called Quantify Your Trading that goes over candlesticks. There is only 3 kinds of candlesticks. All right. You have an inside candle, meaning this candle here was an inside candle. That's candle number 1, where you trade inside of the previous day's range. So if I put a thing above this wick, you can see we never touched that high. We never touched that low. Therefore, this candle traded within side of that candle. Now, your second type of candle is what I call a trending candle. So essentially, that just means that you take out one side of the market. So you can have a bullish trending candle where it's a range expanding day and it takes out the high of the previous candle to the upside. That's a trend. And it can do if vice versa to the downside. If you have an inside day and then a strong bearish closing day, that's a trending candle because it took out the low. And the third and final kind of candle is an outside day candle where you take out both the close and the open of your previous candle. And I don't really see any. It's kind of hard to get them on Forex because usually these candles, they open at the same price. So we'll use this one because it absolutely is one. You see this wick high took out the high of that candle. So that would have been looked at as a trending candle until you took out the low or until you took out the opening price of this candle, which would have then made everybody get short thinking that we're running both sides of this candle. And that is the only kinds of candles there are. Three kinds: an inside candle, a trending candle, and an outside candle. That is it. And look at that. You have all three examples right here in this scenario. Here is your inside candle because you traded inside of this range, your trending candle, and then this is your outside candle. And that's it. And that helps us as traders because we know three things can only happen. That is it. There's only three things that can happen. It's either going to be an inside day, a trending day, or an outside day. And outside days usually, not always, but usually indicate a reversal in price. All right. Inside, let's see here. Are you doing currency pairs? Whatever you want. Euro pound fake breakdown. Let's go look at that for Dave. Let me see if I can find it. Here we are. Nope, that's it. That's it right here. All right, let's remove all drawings so we can start from scratch. All right, this is a daily chart. So this thing is choppy, but it is, I do look at this chart all the time to give me an indication as to whether euro or pound is stronger, which one, because obviously this chart is going to show you. So these bouts that we've been having with strong pound has been making this thing trade choppy. You have pound strong one day and then euro strong the next day. So it is kind of hard to find. You have taken out this market structure swing low down here, and you have cleared out the stops all the way. Let me see here. All right, so that's lower. So all the way to here, you have taken out the stops. All right, so if bigger participants in this market, remember what rests underneath of a buy order, a sell stop. So your stop is a seller. So that makes you by default a seller at a lower price. And this is what retail traders get so mixed up because they're always buying highs and selling lows. You're supposed to do the exact opposite of that. You're supposed to buy low and sell high, or sell high and buy back low. So this is the reason why price action works like this. So there is no real high probable trade. You are right. Bears are currently in control of this market. What I want to see is I want to see a break and hold below this 0.86 level. Oh, not that level, this level here. Well, yeah, we can use that level because it was the last bearish candle on a daily closing. So that works beautiful. This 0.88662 level, if you get a daily closure back below that, you're probably heading lower. And your next area would obviously be this low from this wick. But your next area to look for resistance hold would be 0.87637. Sorry, let me show you where I got that from. I got that from this last bearish candle right here before price traded out of it. I'm not using this one because I do believe that wick low already took out that area. Let's get back over to current price. Yeah, see, we already took out that area. So your next area to look for a solid support hold, if you're bullish, is 0.87637. If you're bearish, your target would obviously be this low first. And then you could shed some and look for this to come into play eventually. If you look at GRNQ and space, yep, I can do that for you, man. Absolutely. Let's go check out space first. I love this company, by the way. Space. It's the only play that we have without outside of Tesla for the space. Well, Virgin. I mean, this is Virgin, but outside of, Tesla and Virgin, this is it. This is the only plays on space that we have right now. I did read somewhere someone dropped an article that Kathy Woods is making a space ETF. So that'd be another play on space. All right. So what I see on space, well, obviously there's these highs up here. This right here is currently holding as resistance. So let's get back over here. First, let's get us another higher level just in case we get above that. So you have gappy price action. I'm going to go into an hourly chart just to see if I can find something above that. I don't know if TradingView will let me go that far. It did. Sweet. Just never mind that line. Sorry. Just going to look and see if I can't find a good solid thing. Well, that's going to be my last one right there. All right. So that'd be 39.11. It's going to be your last area in the sand before bulls control that. Or I mean, they're already in control. You were trading range bound. This is an obvious great spot to buy. We know that now because it's hindsight. But yeah, this pullback here, it looks like you basically, well, that gap was filled there. So this is just where it found support. If you start to sell off from this area, you can look for this gap to close possibly. I'm not in the camp that believes all gaps have to fill. I'm not. So this gap doesn't have to fill. The bulls could absolutely keep this thing moving higher for the rest of its life and does not have to come back and close this gap. It being a bigger gap, I would look for that to happen. However, I would not trade it for that to happen. What I would look for is once that happened, I would look for this area to hold as support. All right. With that possibly area that holding as support, that might be a good area to look for a long. But basically right now, there's nothing you can do. You don't want to buy ahead of this area. This is going to be a target for everybody that got long on this bearish candle. So when this bearish candle was being made, people were buying it up, and it's obvious because the market has traded away from that area. So you may gap completely above that area come Monday. We don't know, but I like it. It's bullish. Look for pullbacks to get long. That's what I would do. That's what I will do moving forward. All right, Euro Pound did that. What was your other one? Q or GRNQ? Gotcha. GRNQ. GRNQ. What is this? Green Pro Cap Corporation. It's a penny stock. This thing is disastrously, hideously ugly. So you're looking for this to hold. I'm not sure what this thing does. If you could tell me what this thing does. I mean, if it's like a biotech play or something, there is a lot of those plays been popping up recently, probably because of the genomic space blowing up. So this could be something like that. You did have a big spike in price, and it happens every time you have one. People just sell it off, dude. I mean, pop in price, sold off, pop in price, sold off, pop in price, sold off. So the next pop in price, I would look to get short. No, don't do that because you can get destroyed in a short squeeze, especially on these low float, low cap stocks. Once they get some steam under their belt, dude, they can fly. And it is always best to be on the long side of these things because you can only lose 100% of your investment. That's the reason I just said that statement. When you get long a stock, you can only lose 100% of your investment. When you get short on a stock, you can lose 1,000 or more percent on your investment because there is no limited downside when you are on the wrong side of a short trade. So it is always best to try to get bullish on these, but it does look like you have found support right here. Obviously, you did close a nice strong daily candle. I can't imagine that that was a very big range that day. Let's go see what intraday price action looks like. It's not the worst or less liquidity I've ever seen, but it is pretty thin, man. That's why these things fly. There isn't any liquidity in there. And anybody that is in it is generally short. So once you start to break above key areas, when the shorts start to refill their positions or get stopped out of the market, you start to fuel up some buying pressure. And on top of that, this thing will hit scanners and get everybody else involved. And then the piranha action happens. So I mean, you do look like you've held support here. If you're looking, I would not look at this as an investment, but yeah, that's what it's doing. There's no liquidity in this, not right now. You had some on this day, obviously, but you got sold back off. So just watch this area, one spot 90. See if you can hold that area on a daily closing basis. As long as you're holding above that, might not be a bad idea. Put your stop down right around this area here at 150 or something. Only risk 1% or 0.5% of your total and net total capital, though, please. These things are dangerous, bro. And you have to, I don't know if you're, how long you've been trading or not, but these things aren't really good for new traders to check out. Take a look at Square for Stefano. Let's do it. Love Square. I love trading this thing. So liquid, man. You could buy 5 million shares of this thing intraday. All right, so these are old levels. Let's get rid of them. Let's look at what we got going on. This thing, I remember when this thing was trading for $30. Damn. This thing has been on a tear, bro. Yeah. All right, so where do we want to get involved? All right, so you had a nice pop. You took out this high. Is this an all-time high? I'm probably assuming so. Looks like it. So you did take out that, made a new all-time high, and have since came back down into the fray. This right here was an area to look for a resistance or a support hold. You got that right there. All right. Now, this area would be my next area to watch. This 22.50 area. Basically meaning we want to see like hourly candles pop up above there, come back down and retest and hold on an hourly closing basis. Since there's only 7 hours in a day on these things. So basically, let me break you down to an hourly and tell you what I'm talking about. So down here, obviously, is going to be your swing low, your stop area you want to get out of. If you gap up Monday morning or tomorrow morning, look for a resistance or support hold. Look for price to come back down, close the gap, see if it holds as support at 222.50, meaning you don't want to see any hourly candles closing below that level. If you get hourly candles closing below that level, there's a good chance you're going down here to take out these stops. And if you get that and then you get a strong daily, then look for the next day to possibly be a pullback day. Get long, targeting the high. Not financial advice, but that's how I would play it. So basically just wait to see how it opens tomorrow. I mean, this doesn't look like bears are in control to me. It looks like a simple, methodical, just profit-taking pullback. And that's what you got. Now, this is just basically tested the mid-range point of this candle. So if this is going to be bearish, and if they are targeting this low down here at 209.44, then I would let all that play out before I look to re-enter this on a bearish or on a bullish trade. All right. BNGO. Bingo was his name. Oh, yeah, this thing has been on a tear. And on a tear. Yeah, see, this is the genomics play. These things have been just, I don't know why they're popping up. Something's happened in technology, something good. So, yeah, man, it looks bullish. I think they even did a public offering on this. And, like, yeah, I mean, it's bullish. I wouldn't buy it up here. I mean, unless you're looking at the financial reports and I think that this company, I think some of your longer term traders are looking at this to go higher. I think I heard one analyst say $15, but that doesn't mean I would just blindly buy up here. What I would love to see at least is an intraday retest of 858 and a hold on an hourly closing basis. That might be a good spot to look for an entry. If you do not get that, then you're possibly coming back all the way down here to 573. Maybe there's levels higher on an hourly. There are plenty of them. So you could watch these areas here. I would look for this area to possibly hold a support. That level is 6.75. If you close below that and the bears are in control, then this would be my last area to look for a hold. Be 464. That might be a great buying opportunity on this thing too, because you are clearly bullish. I mean, since here, you are bullish. I can't get these lines to work tonight. Sorry. You are bullish, and that is a healthy looking trend line. I love the trend lines that aren't super parabolic. This is a beautiful trend line. So yeah, it looks to me like right here would be one of the best spots to look for long entries or look for support to hold. We have to wait till we get price showing us that that's what it wants to use as support. Always keep that in mind. We don't know where support's going to be. Price has to show us. The UK 100. I think I looked at this yesterday, but I will take a look at it again. Absolutely. Let's take a look at it on a Wanda. Get back on a daily. So you have a nice resistance or support test there at 6642 spot 30. All right. Now, this did close bearish. So this absolutely could just be a pullback looking to test for lower prices. So let's go into an 8-hour time frame. So I do got this level here from an 8-hour chart, and that's 6642 spot 30. My next area to look for a support hole would be 6510 spot 80. All right. If you get a nice look down, an 8-hour closure above might be a good area to look to get long once you have a CTM entry. If you are a part of CTM, you know exactly what I'm talking about. Once you get something like that, then yeah, absolutely. This thing looks good. It has looked good for a long time. Since you put in this low down here, you've been trading bullish. Kind of resembles like what the S&P 500 did, obviously, but you're not making new highs. But since you came down here and you've been up since. So yeah, this might be an opportunity to get long here or this area down here. If you break and close below this market structure all the way down here, then I wouldn't be looking for bullish opportunities anymore. Then at that point, something would be different. You know what I mean? And there's a good traditional support resistance line right there too. You could basically look at that 6321 spot 90. Got all these taps here, all this interaction here, nice tap there. So that would be my last bullish line in the sand. As long as you're trading above that, I'm bullish on this. UK 100, believe it follows Bitcoin. What's believe it follows Bitcoin? The BNGO? I don't know about that. It's possible. Or I could be just completely misreading your comment. So, all right, guys, that's all I got to look for. If you guys don't have anything else you want me to throw up on the chart real quick, let's just go look at Bitcoin real quick. I did do my thing yesterday, but you can always look at Bitcoin, right? Bitcoin is beautiful. We love that Bitcoin, or as Jordan likes to say, the Bitcoin. So the Bitcoin came down, tested this, and you are still trading inside this range. You came down, tested this candle or close to it, and you found some support there so far. So that looks like this is still good. You start closing 8-hour candles below this market structure level, and you're probably heading lower. I got these areas down here, one at 27,039, spot 39. I don't know if it's going to get down there, but that's the next area to look for if you do start breaking down this market structure. So if dollar starts getting weak again, that would absolutely help Bitcoin. So you got to think, when did Bitcoin start selling off? Well, when the dollar turned around, right? Let's go look at the dollar. I could be absolutely wrong on this, but Bitcoin made a new all-time high around January the 8th. Let's go find the dollar and look where dollar turned around. Here we go. Dollar turned around when? Oh my God, around January the 5th. That's magnificent. Yeah, so dollar weakness is absolutely going to help Bitcoin's case out. That's absolutely well, Michael Saylor and a few other billionaires, but people are buying Bitcoin, and with dollar weakness, that thing's going to continue to go to the sky. I would love to see dollar show some more weakness. Love to see it personally, because I'm short euro yen or USD yen. Sorry, the Bitcoin. Yep. Or GRNQ follows Bitcoin. Yeah, I don't know. I have no clue what that thing is, but you know. All right, guys. Thank you guys for showing up, man. I really appreciate it. Hopefully this video will upload it with better quality than the one yesterday did, as I'm still trying to learn this new platform until I get better internet over here. So with all that said, guys, we will talk to you next time, and thanks for showing up.